How do we select the stocks in client portfolios? The most important thing to know is we're not looking for a needle in a haystack. Rather, our top-down process narrows the investment universe so we can find the haystack with the most needles. That's why our stock selection process starts with the higher level themes and opportunities that we can represent with specific stocks in the portfolio. As a quick example of how this works, if we decide that now is a good time to invest in markets, and our analysis tells us that we should have exposure to large, multinational consumer staples companies with strong brand name recognition and global supply chains, it really doesn't matter if we buy Coke or Pepsi in the portfolio because they're benefiting from the same high-level macroeconomic conditions. But we still go through a very rigorous stock picking process, and we have an entire team dedicated to this. This is really where we marry the top-down research with the bottom-up research. We first run some basic risk control screens. We want to ensure that we have enough liquidity so we can buy and sell freely without having a big influence on the stock price. We do the same thing for balance sheet strength, which we call solvency risk. We want to make sure we're avoiding companies with bankruptcy risk, certainly. And beyond that, we can really sum up the stock selection process in three main points. First, we want to find companies that actually act like the categories that we're trying to get exposure to. We do this through our outlier analysis. And then next, we find companies that have individual company characteristics that tie into our top-down views and give them a competitive advantage over their peers with a management team that has a strong track record of executing on those competitive advantages. This is also where we look for red flags at the company and industry level. Now, no investment is going to be without risk, but we do want to go in eyes wide open so we can monitor them on an ongoing basis. And finally, we want to pay a reasonable price for them. We look at valuations and make sure that all the good things we're seeing about the company aren't already reflected in the stock price. Or we confirm a higher valuation is justified based on our forward-looking expectations. From there, we repeat until we have a well-balanced, diversified portfolio, and our securities analysts provide ongoing monitoring of every stock to ensure they're behaving as expected over time. It's a tried and true, repeatable process that we conduct on behalf of all of our clients.